How do you manage marriage and this career in franchising?
Very carefully, and we had to learn how to do it well. Todd and I decided that we both have areas of strength, and Todd's are more financial and strategic, and mine are more operational and marketing focused. And so we learned that we needed to provide each other's lanes to operate in, where each other will defer to the topic that at hand for where their strengths are. And we had to learn how to do that over time. It didn't always happen. And do we make mistakes and treading each other's territory and have challenges communicating? Sure. But at the end of the day, we know that our marriage is more important than business.
Welcome to the Franchise Hot Seat Podcast, where we talk about all things franchising. Now, here's your host, Dr. John P. Hayes.
Hi, I'm John Hayes with another episode of my franchise podcast. My guests today, members of the Titus Center Advisory Board, which I appreciate very much, Kristi Mailloux and Todd Recknagel. And this is a powerhouse couple in franchising. The businesses that you two are involved in are just amazing to me. I don't know how you did it. I have more years invested in franchising, but I'm a lot older than you are. You're still young compared to me. But you've got 30 years invested in franchising and private equity and involved in so many different businesses. I don't think I know them all, but we're going to cover some of that. So first of all, welcome. Thank you for doing this, and say hello to our audience.
Hello, great to meet you.
Hey, yeah, great to be on, John, and we appreciate that. So first, I just want to say, when you talk about all the years and all the involvement, we've just had amazing partners over the years. We've been so blessed. And we're blessed by a Heavenly Father. And so anyway, it's more about that than it is about us, for sure.
Yes,
so,
exactly.
Anyway.
I say that all the time when people congratulate me about something Titus Center has accomplished. I'm just the instrument. It's been God's plan for Titus Center and for me through so many, many years. And franchising has been a tremendous blessing. And the thing about franchising is very few people ever grow up saying, I'm going to be in franchising when I get older. There, until recently, no place to study franchising. You had to do it live, in person, working for some company. And generally, you didn't even know you were applying to go to work for a franchise company because that didn't matter and nobody made the distinction. I stumbled into franchising when I was in my late 20s to write a book about franchising. Otherwise, I didn't know how to spell the word. And I've discovered that everybody has sort of that kind of story. So how about Kristi? How did you decide franchising would be my 30-year plus profession?
Well, similar to you, John, I actually stumbled into it. I was applying for roles after I graduated from the University of Michigan. I had a psychology degree, and I was actually looking to go back to school in a year or so to become a psychologist or a social worker so I could counsel folks. And I didn't have the funds set aside to pay for that, so I had to start my career somewhere. I applied for a role at Molly Maid, a maid service franchise, and I started at the entry level, and I ended up spending 20 years there, working in multiple roles, fell in love with franchising and what small businesses offer families, and I decided that that's the future for me. And I was the folks there, Dave and Karen McKinnon, who brought Molly Maid to the U.S. from Canada, provided plenty of opportunities for me to continue to grow and work in franchising. And I actually ended up running a couple different companies because they also set up a platform of companies called Service Brands International, where we had 1-800 Dry Clean, Molly Maid, Mr. Handyman, Ducks, Certified Restoration Dry Clean Network. So it was a great company to start with and grow in my career. And when I started, they had about 35 franchise owners, and I ended up becoming, in my last role at Molly Maid, I was the president for a 6-year period.
Todd, how did you come into franchising? And from Kristi's story, your paths had to cross, particularly Mr. Handyman, I would guess.
Yes, right. Well, so I started out as a banker and an investment banker. I was a banker with Fifth Third after and during getting my MBA in finance. So I come from more of the financial discipline, and then we co-founded a little mezzanine fund that did pretty well, became an Inc. 500 company, actually. actually in 1996. But I found myself, after working on other people's businesses and plans, I was just like, I am so entrepreneurial. I can't do this anymore. I need to jump into something. But I was enough of a banker that I loved a formula. And so my father had owned a group of pharmacies. My grandpa was actually an early AW franchisee, so it might have been in the blood.
Okay.
But I jumped in and bought, in the 90s, bought a group of Blimpie stores, or launched them, and then was an area developer in Blimpie, helped develop a number of stores and became the largest franchisee. So, and that did okay. I mean, Blimpie since then has not done great, but it was such a great learning and training ground. And I just fell in love with franchising from that point on. I got involved with the IFA, saw some other brands. Then I came over and actually partnered in with Service Brands, helped drive Mr. Handyman to the 300 units and the growth that we had there, helped and worked and partnered with all of the brands. Service Brands had Molly Maid, Mr. Handyman, 800 Dry Clean, Pyro Clean, Ducks. We helped give Ducks a launch. And so very exciting times. And then that's how I met Kristi. We can leave some of the later development and some of our other brands for later in our talk here.
Yeah, sure. And then the company is 320 Capital Group. Okay, what does that mean?
Well, 320 stands for Ephesians 3:20, which is unto him who is able to do exceedingly and abundantly beyond what we could ever ask or imagine. To him be the glory. So he, and it's really Jesus, is the hands and feet of everything we do, right? And so not only can he heal the blind when he was here on earth, today he can heal our business. And so we try to do everything and work through him. For us, 320 Capital Group is the name of our family office. We have some charitable remainder trusts that we've set up that we also invest, and so we're able to do investments in equity and debt and lending, and then get into some of these companies and investments that we've gotten into in the last probably since 2010 through 2011, when I left Service Brands. We've been doing more of the private equity investing with our group.
And why private equity rather than being franchisees, multi-unit operators, which you do that? Why private equity? How most of the multi-unit, multi-concept franchisees I talk to are not in private equity for lots of good reasons, I'm sure. How important is that to the two of you? And then talk about your emphasis on private equity and franchising.
Yeah. Well, Kristi, you want me to take that one? Yeah. So, we have kind of a unique but simple formula. Oftentimes, we are minority investors in any of our deals. And what private equity might not have is the connection to franchising. We have that. We've been in, over 15 or 16 different brands that we've been a partner, investor, leader of. And so we have the hands-on operating part of our investment that oftentimes the private equity might not have. What private equity has is funds that they need to invest and engage. So you get a lot of young people. I call them young because many of them are younger than the three of us.
I understand.
But you get a lot of young people that they're trying to invest these funds, and they maybe don't understand the franchising model fully. They're smart people and they get it. And so what we do is we're able to invest our sort of what I'd call maybe the smaller check along with their larger check, which gives us the capability to do a $50 or $100 million deal. And we invest it together where we're kind of lockstep with the private equity firm. They're firms that we've dealt with, that we trust, that we partner with. And so, in effect, we don't necessarily have control, but together we do have control. Okay. And then oftentimes when we partner in or buy out, we'll leave the founder or the driver or the entrepreneur that started it and grew it. They'll stay in place, or they might have an investment in it and continue with a rollover. So we love that model. We can affect deals that are probably bigger than we are. We can help build out the management team. We've gone through a number of sales in that sales cycle process where we've returned, 5 times, 7 times, 11 times. One deal was 17 times our money.
Wow.
our investment. So that's helped us to scale up and do things that we otherwise might not have been able to do.
Okay. So of the brands that you currently are engaged with and brands that you no longer are engaged with since you began 320 Capital Group, how many total brands have you impacted as managers, partners, investors, any one or all three of those?
I think as we've counted up the brands, it's somewhere in the 15 neighborhood. You know, if you count Blimpie as a large multi-unit franchisee, and then I rose to head up the area developer national board, and we were on the advertising board. So we in the 90s helped Blimpie, and then if you kind of go forward through all the service brands, and then a lot of people don't know that we were partnered and board member operating partners in Take 5 Oil Change, for example, when that went from 20 to 90 units, and then that got bought by Driven Brands, which is owned by Rourke Capital, and so that's at 1,000 units today, but still utilizing the model that we helped develop. And so when you add them all up, we're chairman today of, and co-CEO, Kristi and I are both co-CEO today of the largest Massage Envy group in the country, which is 131 units right now, the largest franchisee. We're also chair and co-investor operating partner in Sola Salons, in a group of Solas that is called Salon Freedom. So we have 60 salons. There was an example of a deal that we started with 30 with a good operator that was a partner, did a wonderful transition, brought in a CEO, brought in a CFO, built out the C-suite, and now are enjoying nice growth and returns and have doubled the size of that company. So, and Kristi, I know I'm leaving out.
And then lastly, our investors, partners, and board members in Office Pride, a commercial cleaning franchise.
Right.
Wow.
With Christian principles right up front and center in that business, and maybe some of the others do as well that you're involved in, but Office Pride makes it known that they are Jesus followers and implement those values in their day-to-day business, which is of great interest to us at the Titus Center as well.
Yeah.
So it's just amazing.
John, you mentioned the other companies. A lot of times we will start board meetings or management leadership meetings with prayer.
Yeah.
And we have a couple of wonderful Jewish partners, and we're praying to the same God. And so we'll sit in a board meeting and start the meeting with prayer, and it's just such a blessing to our heart.
So at least 15 of these companies that you've impacted. Some people spend years trying to find one that they can get involved in. So what's the secret here? Why is it that you've done 15, might do 15 more over a period of time? Other people say, wow, there's just nothing out there, or it's hard to find the right opportunity. Is it hard, or is it knowing what to do?
Well, we've always been attracted to businesses that have a repeat recurring revenue model, and we know how to scale. Well, God has blessed us with the wisdom of our experience over time to learn how to scale those businesses, look for the right people in the right seats to help scale our businesses, and then strategically put a plan together that really takes us to the next level. And so we turn away a lot of opportunities. We look at probably 30 deals a year and find the right fit for us. And a lot of things have to be aligned for all of that to come together. But we're looking for repeat recurring revenue business models where we know we have an opportunity to scale those to higher levels. Great partners that we know we can scale with. We won't get in business with folks that actually have a set of filters of whether we'll say yes or no to a deal. And if it doesn't fit within our filters and great partners are part of that, we'll turn that away. So we've been blessed with God giving us wisdom and knowing what we would be the right for us.
Yeah. So, Chris, go ahead, Todd.
I think I would add, too, that over that time period, we've had a lot of managers and directors, and I mentioned partners kind of at the beginning of this podcast. We've had a lot of managers, directors, folks that we've hired in to any of the various companies that we've helped lead and grow. And so as we depart or sell, or as they move on, or as they go on to something, at one point we had counted that there were over 25 different individuals in our past that have become presidents or CEOs of their own companies. And so when you kind of create a little bit of a network like that, and if you're always loving and lifting everybody up and staying in contact with them, we've seen a lot of just opportunities that come our way as part of that network too. So, I can think of an initial introduction to TriVest in the first place back in 2009. That only came about as from a friend that we had helped in franchising, and Office Pride was a friend in franchising, and so many different opportunities that my former head of development, has led stuff to us.
So and this might be out of date, but I believe you did 10 investments in the last 5 years. Is that current, or is it bigger now? Or
yeah, it depends on how you count it, right?
Okay.
So I'm a sales guy, John. So
Yeah.
we can exaggerate this, or I can give you the real number.
Right.
But we have done. There was a year in 22 where we did 2 deals in that year that were big platform deals that we did. Sola and Office Pride. Office Pride might have been the end of 21 in December. So that would be what we would call a core brand new investment. But then we also do, within those companies, we'll do acquisitions. So for example, April of 19, we did the Massage Envy group. We pulled 28 units together, including our own, because we had been in the system 3 or 4 years prior to that, had doubled up the earnings of our group. And then after that point, we bought out about 20 franchisees. So just in the last 5 years, we've done 20 transactions just within Massage Envy to go from the 28 units to 131. A couple of those were brand new store openings that we developed as well. So there is a big number if you include add-ons, or there's what we call platform numbers if you include, a deal a year for the last 5 years.
okay.
That's
And other than Blimpie, did you move away from food? Is food not of interest? These are service businesses primarily that you have, I think all of them.
Well, we do have, Kristi, I can't think of the word what are the words that we call the rules around?
Filters.
Filters. We have filters of what we will do and won't do. Thank you for that. We have filters, and I wouldn't say food is one of our filters to not do, but what we do know in terms of what we will do is we like service enterprises, we like repeat recurring. We will get into messy businesses too, like cleaning can be messy, and you're trying to hire people and all that. And she was in Molly Maid, we're in Office Pride. And so, but the reason we like that is because we believe we have a good understanding of how to service the customer well, make them zealots, keep that repeat recurring, get a premium for doing what many other companies aren't willing to do it the right way or the best way. And you can scale an enterprise quickly. So that's why we like the service side. With restaurant, my only issue would be it's tough to control the real estate, the labor, and the food costs. You got all those 3 variables. Now, some of these restaurants are doing that all extremely well and doing the service so well that they're hitting the numbers that we would envy by doing great service, great technology, all of that. So I wouldn't rule out a restaurant. In fact, we actually looked at a restaurant group this year, came close on it. But so I wouldn't rule it out, but it would take something special.
But are the margins always more impressive in service businesses compared to restaurant businesses, even though restaurant may be doing, or food may be doing much more volume?
Well, it depends. Pizza margins are pretty impressive, and so that's why these Domino's and even Pizza Hut and everybody are in the billions, right? We like the strong margins of a service business. For example, I'll just take Mr. Handyman, a brand we know so well. When you can bill at a premium and take care of somebody's to-do list and be there for 4 hours, 8 hours, and charge a nice premium almost at a level of a plumber or electrician, have them be happy, have high satisfaction ratings, and you have one person on a van and you're getting a premium for that, that's a nice business.
Yeah. Yeah.
So we've looked at some of the mosquito concepts where again it's one man in a van. Now you're released from visiting the home inside the home, and you can just kind of treat around the home. So lawn care, you can stop by whenever you want to.
Yeah.
So we like those kind of businesses,
Okay.
frankly.
So this is kind of a personal note that when I moved into Philadelphia to teach at Temple University, a block from the campus, we had a Blimpie. And faculty would go there frequently. That's where we would have lunch. But nobody really knew about Blimpie. But we all liked the sandwiches. Now, I went on to become friends. Friends is not the right word with Fred DeLuca, an associate in a way with Fred DeLuca. And I wrote his book, Start Small, Finish Big. So I knew a lot about the DeLuca story. But I always thought Blimpie was a superior product. I hope I'm not offending anyone by saying that out in the world of franchising. But what was wrong? Why didn't Blimpie become the Subway?
All right. Well, you asked the question, John, so I'll answer it, and it may cause a little controversy, but there is a blessing in all of it too. The Blimpie had started actually in 1964. Subway started in 65. Both of them actually were inspired somewhat by the Mike who had started the original Jersey grinder on the shore.
Yeah.
His goes back to like 1957, something like that, 7 years earlier. And so through the years, Blimpie developed in New York and Philly, kind of the area you're talking about, and then spread across the country in the early 90s and throughout the 90s, got up to 2,000, 2,100 units. And sadly, as we were growing, we were doing the fresh slicing, the quality was really good, and we were beating Subway every day of the week, except that Subway was continuing to expand. They went from about 2,000 to 5,000 stores in that period.
Yeah.
We got up to 2,000. But we were competing very well. And Jared came on about that time, helped them. But meanwhile, some of our food costs were increasing. Blimpie got sold. Some things were changing where franchisor was taking money back on food. Quality was dropping a bit, and it was very noticeable in the bread, in the meat. We shifted from Coke to Pepsi. There were a lot of strategic errors that occurred that harmed Blimpie, frankly. There were even some underlying lawsuits and all kinds of stuff. Meanwhile, Pete Cancro, that picked up Jersey Mike's and the original inspiration from the shore, grew very slowly, grew very steadily, had these sandwiches that were just like the Blimpie sandwich. If you go back into the 90s, the Jersey Mike's are kind of like the original Jersey grinder that was the original inspiration. They did steady as she goes. They kept growing. And then even more recently, 2, 3, 4 years ago, Pete, instead of being a franchisor that was taking more money, if you look at their history, he turned around and invested more money, even paying for things in the franchisee's store, and then their sales shot up like last 3 years, 20% a year, something like that. Just crazy great numbers. And then now look at Jersey Mike's success today, just being invested in by Blackstone. So when I look at that, I say, wow, that is a little bit of a tale of two. Blimpie has less than 250 stores today. It's very sad. Lots of folks in franchising have their legacy in Blimpie when they had all these stores. And what a testament to doing the right thing and how successful Jersey Mike's is.
Yeah. Isn't it interesting that Blimpie's was a better product than Subway?
Yeah.
But Americans don't respond to better products. Fresher, fresh sliced, the bread was better. What's that about? Why do we not care? This is a better product, but we'll still go to the other place.
Yeah. Well, I think when you have the big voice, and Subway on their way to 5,000 stores at that time, had the big voice on the advertising, then Jared kind of fell into their lap. So even though our sandwiches were lower in fat, Subway became the low-fat leader with the Jared and, walking from school every day and getting, the turkey sandwich. And so at that time, they had the big voice. Today, I do find it interesting that there's a movement now in Subway to put slicers back in the units and to go back to fresh. So they're trying to come back into quality, which is kind of where we were, 25 years ago, right? So.
Yeah. And also, just to touch on this, I've never spoken about this, the Jared story at Subway. Did it negatively impact Subway? And I don't want to get into his story. Everybody knows that there was something that smelled badly in that situation and such an embarrassment and a travesty. But did that negatively impact
I don't know that I can speak to that because I really don't have any of the numbers or data. And so I think by that time, I'm guessing that people disassociated Jared and the brand necessarily. Yeah. So I don't know that.
Should that be a fear to franchisees that the franchisor is going to align with a spokesperson who's going to end up doing something horrible and embarrassing us? Is that a concern that you have, the two of you have?
I don't believe that you can live your life in fear in that way. I do believe that we do prey on a lot of decisions we make if it involves people or other things. And no matter what happens, I believe that you can get through it. But by preying on who you partner with and who your relationships, I think you can really keep yourself from a lot of that happening for the most part. So that's how we try to operate.
Yeah. And I completely agree with Kristi on that too. I guess I would look at it the other way. When Papa John's kind of ran into a little bit of trouble, they all of a sudden turned to Shaq. Shaq became a multi-unit franchisee. Yeah. Now he's a spokesperson for him. Now they've come out with the Shaq-a-roni or whatever, the big pizza. Right. And it's done fabulously well because Shaq's a great guy and has a great image. And so I would look at it more on the positive than a risk.
Yeah. And Kristi, how about this issue? Being in franchising and operating as many businesses that you're involved in, that's a full life. Being married to a guy who does the same thing, how do you manage that? Is marriage more difficult because of the path that you both go down franchising, or is it more convenient because that's what you really, I know it's not the only thing you have to talk about, but it would be difficult not to spend so much of your time talking about brands. And when you have multiple brands, one is always giving you a problem. How do you manage marriage and this career in franchising?
Very carefully, and we had to learn how to do it well. Todd and I decided that we both have areas of strength, and Todd's are more financial and strategic, and mine are more operational and marketing focused. And so we learned that we needed to provide each other's lanes to operate in, where each other will defer to the topic that at hand for where their strengths are. And we had to learn how to do that over time. It didn't always happen. And do we make mistakes and tread in each other's territory and have challenges communicating? Sure. But at the end of the day, we know that our marriage is more important than business. Our relationship with God's even more important than that. And we know how we should be operating in those scenarios. So if we're focused on the right things and remember our priorities, it's been a healthy way to balance what we're doing. I love it because we spend a lot of time together, and we love it that way, actually.
Yeah.
And so God's been good to us where we get to do it, and we look at it as a complete blessing versus something that we dread for both our marriage and for our work lives.
Yeah. I would add that as we were going on and going and growing, if you go back 5 or 6 years ago, we came across marriage ministry that's called Married for a Purpose. And it takes, it's kind of can take a normal marriage and take it from good to great. And it's amazing if you have a combined collective purpose and it's inspired by God. I mean, every marriage is unique. You have two unique individuals, but as they come together, there is a inspired divine purpose and God putting you together in each unique marriage. And so when we started to go through some of those exercises of maybe how God wants me to view Kristi or how Kristi wants God to view me, our purpose became very clear. And we have actually, in the last 5 years, we've pivoted a little bit from some of the portfolio companies that are helping us make money, if you will, to actually some of the ministries. We have 3 or 4 ministries now that we funnel money and time and resources into, sort of like the portfolio companies, where we can bring our expertise to those. And so we work together on that as well, and we get so much much joy and gratification from that, kind of viewing it the same. And that's sort of become our purpose as a couple and as a marriage. And it's given a direction toward our charitable trust and our foundation. We have a foundation now. And so those pieces for us have been just amazing. And I highly recommend that the Married for a Purpose ministry, that's one of the ministries we support and help. And their coaching is awesome.
And that can be found online.
Yeah, I think the
People who are
website
interested
is
in Married for a Purpose.
Yeah, it's
Yep.
marriedforapurpose.org. Right, it's a nonprofit. They have like 100 coaches now. We've helped them scale up almost like a franchise.
Great.
And so they're amazing ministry.
So what happens when one of you says yes to a deal and the other one says no to a deal? How do you get through that?
Well,
That's yours,
that
Kristi.
actually happened because I often joke that Todd's never seen a deal that he didn't like, and it's a joke between us. It's not real. But we have to put it through our filters, which Greg and Julie Gorman, who are founders of Married for a Purpose, help us create together along with another coaching organization, Halftime, that Todd was a part of. And we realize that you can't do every deal that's out there, and there's going to be some that one really likes and the other one doesn't. So we bring them through our filters, and that helps answer the question completely. If you know what's important to you and you have a set of filters, you can really say yes and no a lot more easily if you know what's important.
Yeah, so John, your questions have been so good and so insightful.
Thank you.
And that is one of the rules, that we must be in agreement. But the rule just before that is we must come into neutral. So, and it may seem strange, like, well, what does that mean? Yeah. Well, if old Toddy boy is like, oh, if we could fix the sales process, this would be a great deal. Well, maybe fixing the sales process is why it's struggling and needs money or needs an investment, and that could take a lifetime to fix the sales process. So unless Toddy boy comes down into neutral and says, you know what, I could take or leave this deal. I don't have to have this deal. And Kristi might find something that she likes, and so if we both get in neutral, both pray on it, and then we have to both be in agreement. And so a lot of times her perspective coming in and helping me and my perspective, wait a minute, Kristi, this is kind of what I see as the opportunity. And she does, it's really an interesting process to go through those filters. And praise God, it's been more positive than not. Not that we haven't had some blingers or something we lost money on or did something, but you can go back and look at almost every one of those and say, you know what, we didn't follow the process on that one.
So when you mention fixing something, in this case you mentioned fixing sales, isn't that where the opportunities are for the two of you? When you look at a deal and you say, oh, their marketing is way off, we can fix that.
Yep.
Or am I making it too simple?
No. Yeah, go ahead, Kristi.
I'm just going to say, unless they've made a fundamental flaw, everything's typically fixable. It could be so big, though, that they made too many mistakes along the way, and it's hard to pull it back from where it is today, that make it a longer process to fix. And then you can't get momentum and scale as quickly as what you like. So unless there's a fundamental flaw or a major mistake that they made, everything is fixable, we believe. It's just how much time and effort and resources it's going to take to get there.
So it's a little bit of a evaluation of a little wisdom of life is just too short. You know, if we're going to be in a 5 or 6 year hold of this investment, can we fix this in the early days? Does it need a new CEO? Does it need a new leader? The existing CEO might say, this is my baby, I can't give it up. Well, we're not gonna fight that battle. So we come into neutral on big decisions like that.
So, Kristi, you mentioned at the beginning the importance of the bus, which is the metaphor for a company, and then getting the right people on the bus, but not only the right people on it, but into the right seats, which is where I think franchisors often and franchisees often make a mistake. They hire great people, but not necessarily in the right seat. So I'm interested in the two of you working so closely together and so successfully. You're in the right seats. You're the right two and you're in the right seats. And God has blessed that relationship as well. But where are you two on the DISC, the dominant, influencer, steady, competent scale? It seems like Todd is a C because he's into finance and banking and he loves those kind of details. And you're more of an influencer, the I personality. Am I close, and have you looked at it that way? Do you know
Yeah.
your DISC scores?
Are interestingly similar. However, I'm high I, you're right, John, and then second would be dominant for me.
Yeah.
That's also a challenge because we're both drivers.
We're both on the dominant
Right.
side, right?
Yeah, in that way. And Todd can fill you in, but we're not too dissimilar, which also makes working together a little bit more challenging. Todd, you're a high D and high I. Yeah, we're pretty similar.
And you're a high I, high D, Kristi. So
Yes.
you do complement each other, but Todd, you must reach into that C area where you've got to look at the data and it takes you time to make a decision. But when you make a decision, the C's make great decisions.
Yeah.
But that can drive Kristi nuts with her D because, hey, Todd, let's get going.
Exactly. Well, so oftentimes because we know kind of that difference, I'm also a little bit interesting in that I'm left-handed, but I'm also ambidextrous. And so I have a very intuitive side. My mind is always going. And so I'm a little bit of an enigma. And if I come up with an idea, I've got to try to express it, but I need to make it very literal for her. A lot of times she needs to, understand, well, wait a minute, what are all the steps? And I'm like, well, I can't lay out the steps right now. I just gave you the vision, and so a lot of times what the marriage coaching brought us through is stop, take a breath. Let's think about this. Does it need to be said right now? Do we need to think about this and work on it? Do you need to approach each other in a kind, loving way to explain it? She might need it a little more literal. I may need just some space so that she can understand my vision maybe a little more. And so we do work back and forth that way a lot, trying to work in each other's strengths. And for me, I mean, Kristi is so incredibly amazing on the operational side that I just praise her for it and love her for it. Couldn't live without it, and then I think she still has the same respect for me like we had for many, many years when we worked together before we were ever in any relationship. And so we can both feel that out of each other, and I think that helps. I mean, this is kind of turned from a franchise thing into a marriage coaching seminar.
Yeah, well, that's great because, isn't franchising a lot like marriage?
It sure is. It sure is. Yeah.
And so few people, I'm so happy to hear that you know your DISC profiles because it's so simple and it makes so much sense. Franchisors run from it, and franchisees do too. People generally run. They don't want to be pigeonholed, they will say. But we're already pigeonholed by what we do, what we say, how we behave.
Right.
People perceive us. And if we don't embrace that, okay, I'm an I personality. It has a lot of positives. Of course, it has some negatives too. But each of the personalities does. And wouldn't it be better to know that? And as you were talking, Todd, about you're managing the relationship, and Kristi will do the same thing, knowing what she needs and she knowing what you need.
Right.
This is franchisors and franchisees can learn from that segment right there.
Exactly. Well, one of the things we did way back at Service Brands, we had Joe Matthews, who's been a longtime friend, and Joe had come in and done some coaching on the development side with us. And we started to do the DISC training. And what that meant was we profiled some of our most successful franchisees in a number of the brands and the least. And then I can remember when we had the profile and we said, okay, you really have to be this profile. This is the range. And we had somebody that was way out of whack on the range. And I remember on a discovery day saying to the person, hey, this probably isn't the business for you. And the guy asked me, well, why? And I said, this business will drive you crazy. This is where your dominance is, and the area where it needs dominance is going to be completely out of control for you.
Yeah.
And it's going to drive you nuts.
I believe in that. I know franchisors don't want to turn away a sale, but if you look at the bottom 10% of your franchise network, and let's say they are S and C personalities, and you look at the top 10% and they all have D in the first or second position,
right.
What are you doing? Accepting as a franchisee an SC, it's going to be a disaster for them. They're
Right.
not going to validate for you. You're going to spend all your time trying to satisfy them, answer their questions, and you'll never be able to do it. That's a whole nother topic for for us. We've
Right.
got like 2 minutes. And Todd, I wanted to ask you about, you're a public speaker on faith and franchising, and what a great combination to have. And just tell us about that. How does that?
Well, just even from some of the things that Kristi and I have shared, the faith and the love of the Lord is kind of at the center of where we're at. So we're going to be, in eternity all together with all the believers, right? We think with the Holy Spirit here that we're leaving so much on the table just living in our daily lives, listening and being guided. And so we think that the franchise operators, who are kind of the shepherds of each of their own flock, that there's an opportunity to reach out kind of to that last frontier where sometimes some of the churches have stumbled and maybe are declining, maybe our public institutions, governments have stumbled, prayer's not in the schools anymore. But you know what? As business leaders, we have the opportunity to become faith leaders and shepherd our flocks. So one of the things that's been on my heart is to start a faith and franchising group. I've been involved with the IFA prayer breakfast, as you have, John, for many, many years. In fact, helped start it and co-chair it way back 25 years ago. But today, I think that kind of having cohorts and having groups and actually starting in 2025, that's part of our plan to actually build a group so that iron sharpens iron and we can help each other bring faith and prayer and living out your faith in your franchise business. And so we're pretty excited about that. I don't know exactly what shape and form that's all going to look like, but it'll probably be cheap and easy to get our material, and we'll have to build out some content and then bring a lot of our friends in franchising in, but that's something that we're going to be doing this year.
Well, I'm going to look forward to talking to you more about that. And I really appreciate the time that we've had. A lot more things that I want to discuss with you, but this was a good beginning.
Thanks for tuning in to the Franchise Hot Seat Podcast with Dr. John P. Hayes. Tune in next time for more conversation around all things franchising.